Alright guys, welcome back to the channel. In the two previous episodes, I spoke about the mindset that you need to use to become profitable traders. I also talk about the trading strategy in terms of risk reward ratio, percentage of your account that you would or should risk on each trade, and how to stay resilient and to keep yourself in the game. Now, as I've said previously, this is a channel dedicated to swing trading because I swing trade and I've found swing trading to be the most profitable form of trading. And so everything that I see is based on swing trading. I'm not a scalper, I'm not a day trader. I've tried those things before, didn't work out for me. I found that swing trading is where I actually make my money. So let's get into it. So today we're going to do some chart analysis. And the first thing we're going to talk about is how the Forex market actually moves. So the Forex market moves in three ways. Or should I say it moves in three directions. Either goes up, it goes down, or it goes sideways. And when it does this movement, there are areas that resist the movement. So there's an area that resists the movement upwards. There's an area that resists the movement downwards. And there are also areas that resist sideways or diagonal movement. Now, these areas can be called as areas of interest. So generally, they can be called as areas of interest, regardless of whether the area is above price or below price. Or in other instances, we can be a little bit more specific. So if price is moving upwards and there's something stopping it from going even higher, that area is called a resistance or a ceiling. So that ceiling is called an area of resistance. If price is moving downwards and there's something preventing, there's an area that prevents it from going even further downwards, that's called a support or a floor. So ceiling higher or resistance, and floor, which is support. Now, when price is at an area of support and price is going to go higher from that point, we see that price is buying off of an area of support. And when price is at an area of resistance or it's high and it's going to sell down, we're going to see that it's selling off of resistance. Now, let's look into that a little bit more. So this is our chart here. We're looking at CHF-JPY. This is on the 4-hour. Now, let's look. Let's see. Let's start from here. Let's start our analysis from this point to this point. We can see that price is moving in an upward direction. When price is moving in that upward direction, we call it bullish momentum. So price here is bullish. So price initially started off at this point and eventually ended at a higher location or a higher spot, which is bullish momentum. Price at this higher spot now, it's sold down to a lower area, and we call this bearish movement or bearish momentum. And if we do our analysis, I like to do what I call top-down analysis. We will see our areas of interest. We'll get into this, how we find these areas of interest a little later. We will see our areas of interest, and we can draw them out. All right. So as you can see here, well, let me take it down to the 4 hours again. As you can see, price doesn't just simply move in a straight line. When price wants to go higher, or when price is bullish, what does it do? It starts off at a point, it goes upwards, comes back down, goes higher, comes lower again, goes higher, comes low, goes higher. So how do we explain this, or how do we state this? When price is going higher, or when price is showing bullish momentum, what it does, it forms a high, then it forms a low, then it forms another high that was higher than the previous high. So we call that a higher high. So when price is going in an upward direction, it forms higher highs, and then it forms a low that was higher than the previous low. So it forms a higher low, a higher low. So we have a higher high and a higher low. Once again, it forms a higher high. This high is higher than this previous high, and a higher low. This low is higher than that previous low. So that's how we determine the direction that a chart is moving or that price is moving. So if price is bullish, it will form higher highs and higher lows. Now, if price is bearish or if price is selling off, it will do the opposite. What it will do is it will form a high, then it will go low, then it will form a high that is lower than the previous high, and then it will form a low again. And the low will be lower than the previous low. And then it's going to form another high that was lower than the previous high, and then another low that is lower than the previous low. So when price is selling, what it does, it forms lower highs. This high is lower than the previous, so lower highs and lower lows. This low is lower than the previous low. Lower highs and lower lows. Lower highs and lower lows. Right? So that's how you determine the direction in which price is moving. If price is going upwards, it's going to form higher highs and higher lows. If price is going downwards, it's going to form lower highs and lower lows. So those are the two most basic directions in which price move. But price can also move sideways. Let's see if I can find an example on this chart of sideways movement of price. We've got a sideways movement here. Here. So the highs are basically equal, and the lows are basically equal as well. So there's no net movement. There's no higher highs or lower lows or lower highs. It's just everything seems to be equal and it seems to be stuck in that area. And that's what's called a trading range. So it's key, especially in swing trading, to know what direction price is moving. Because when you trade, you want to trade in the direction of the movement of price. So if price is moving in a bullish direction, means that it's going high, you want your trade to be following that. You want your trade to be a buy. You want to buy into that. If price is in a bearish direction, you want to sell. So you want to sell or trade with the direction of the movement of price. So in your own time, you need to go on your charts and you need to determine what direction price is going in. I'm going to end this video here, and in the next video, I'm going to talk about how you determine the areas of interest. All right, on to the next video.